Metro Bank plunges on talk of big fundraising to fix finances. And Metro Bank shares plunge on fundraising reports. And welcome back to the channel one. This is your daily news fix. And as you guessed it, we have yet another bank that looks like to be failing. So this one's in the UK. And if any community members are in the UK, please chime in. Please share your thoughts on this thing because you're going to know a lot about like, hey, I use that bank. Oh my God, is my money in this thing? And let's get some details of this stuff. So basically what's going on is the bank fell by a whole bunch because newspapers were reporting that they need to raise money. And this kind of stuff, right? Banks want to keep secret. They don't want to like tell their customers to tell everyone, hey guys, we don't have any money. We need to like get some more in here. And eventually the news did break out. It was interesting because I guess they may need to raise around 600 million. However, I was looking at this thing as well, and this is somewhere I don't think anyone knows exactly the amount number because they're trying to keep it secret. Here is saying here stock falls 25%, but they need to raise 350 million. So it could be anywhere in that range. We were talking about hundreds of millions of pounds, and I think pounds are worth a little bit more than the dollar, but a lot of money. Also, too, my understanding, this is really interesting. They were saying here, the bank started in the wake of the financial crisis and was the first to open in the UK in more than 100 years. So the laws must be very, very different in the UK where like you can't just open up banks willy-nilly. Whereas in the USA, like we give out bank charters like candy. It's real. Like the USA has like way more banks. I think we're talking about like 2,000 to 3,000 kind of bank kind of situation. The UK, I don't think it's that same. But they're saying new banks don't necessarily open in, like what was it, first opened in more than 100 years. So just not that many. And then they were saying here, they called itself a challenger bank. So maybe like, going after young people or something like that. But again, I'd like to hear from people who are in the UK. So it was founded in 2010, has 2.7 million customers. And this would not be comforting if you wake up in the morning and you're like, oh my God, what's going on with my bank? Not cool. And evidently, this has been happening for a while, though. This bank has been really taking a dive, as you can see here. And we are in the midst of a banking crisis. It seems like we're there with Metro Bank. And again, please share some thoughts if you're from the UK. Now, here in the USA, our banking sort of crisis news comes and goes. The last one that we had was just recently was Allied Financial, or Allied Bank, another way to call it. No, they're not failing, but they are firing around 5% of their staff. Essentially, business is slowing. But we've seen this with many of the banks in the US because trading volumes are down. The big IPO stuff is down. We also know like mortgages. Our demand is low. We just talked about that. It was like the lowest, and I was like since 1996. I think that was the date that we saw just the other day. And moreover, we get these crazy headlines. I mean, if you read these headlines here, long bonds historic 46% meltdown rivals burst of the dot-com bubble. Like, okay, we keep seeing these kind of things of like yields as high since the 20 some years ago or whatever, and you keep seeing like demand is low, etc. And this is the kind of stuff that has people worried. If you watch the interview with this guy, so he works over at PIMCO, and it is kind of funny because he's like, well, you don't lose money if you sell. He's trying to like stay calm, but he didn't really look that calm to me. And the thing about it too is you guys, I cover this stuff like say Evergrande or Japan or UK because I want you to know and make it really clear that we're all connected. Because I know that the way that many of the American-based YouTube channels are American-based news, they just act like the USA is the only country in the world, but it's simply not true. Money can come from anywhere, and in fact, the Evergrande thing is big, and it could be affecting things that behind the scenes because as we talked about before, there was Evergrande was trying to build things in like New York or LA, and we're talking like billion-dollar projects kind of stuff. And if that is the money's not coming through, that then affects you, the American, who maybe is a construction worker who has, go to work and they're like, hey, we're not working today. Or, maybe you're food delivery in that neighborhood or restaurants, like all the related business activities, or you're a sourcer or a vendor that, gives supplies to said things. I'm just saying money flows around the world. And, I mention this every time, but I got to mention it again. If you want to read about my experiences in China, because I was in the real estate business, it's funny because I hadn't thought about it in this way where my book is like, hey, look how connected it is. But it just shows like all of us are affected, me more directly. I worked in the luxury hotel design industry, but you can read about it. It's right there in my book. And it was interesting because this is also related to here as well. So this is a picture of the football stadium or soccer in Guangzhou. This is 2021, and I guess they're building it. And I was reading through this is just article. It's always a reminder. I know we look at these numbers a lot, but just a reminder like how big this Evergrande thing is, and I'm just connecting it because like when you see say Metro Bank Philly, don't think it has nothing to do with say your neck of the woods. I mean, it's all connected. Money flows everywhere, and like for example in the Evergrande situations, like 1,300 projects, 280 cities. I mean, that's like massive, right? And then in terms of like in China, it was like Evergrande was at 1.5 million customers with unfinished homes. Like imagine if that happened in USA, if you had like 1.5 million people like that, put money on a home and didn't get it. Like think how crazy that would be. That would be insane. And then talking about, real estate in China, what 30% of the GDP, 80% of household wealth, right? It is a big deal. So that's why we're contracting these things. And, it's funny because we've been talking about the bonds. I mentioned it, I don't know, it was like we started talking about like 2 or 3 weeks ago. And because the yields is certainly started spiking, it would just keep going up. And then like, eventually, okay, now we really got to, now we really got to when it starts hitting headlines, I think it was like 16-year high in the yields. And there's essentially a sell-off in it. And I think all of these global events are connected, right? There's also too, the Fed is quantitative tightening. So essentially they're part of the selling off as well as rolling off the balance sheet. So essentially it's like when they buy these kind of things, they're pumping money into the market. And when they're selling it, they're kind of sucking money out of the market, essentially is what we're talking about here. And it's interesting because what happened with this sort of, was it the 46% loss? Evidently, that was right here. Evidently, I think the peak of the bond market, I think they were saying it was like March 2020 or something like that. And if you piled a whole bunch of money in these things, which some of these, companies, pension funds, insurers did, you're down big. And we'll read through this here. So it says here, a sell-off of global bond market has pushed borrowing costs to the highest levels in a decade, right? So this is why we've been talking about, say, mortgages could hit 8%. That's not out of the question. I showed you guys a chart just yesterday, and you can see here, potential heavy losses for banks, right? Just Metro Banks, we just talked about here, insurance, pension funds, and asset managers that own trillions of dollars of sovereign and corporate debt after loading up in recent years. And you can see here, like some of these people are well underwater, and this is something that's just been happening. And it's interesting. I think what's going on is like we see it in the numbers, but sort of it's like the water's building up, and then suddenly the dam just breaks, and then suddenly everyone's like, oh, okay, now it's important. I think that's sort of like how these things work. I mean, we talk about it all the time, and if nothing happens, like, oh, Chris guy, he's so dumb. What's he talking about? Bonds for and stuff like that. But it just, that's just what I'm saying. It's kind of like you're boiling water, and suddenly it just boils over, and the lid pops off, and everyone starts freaking out. And take a look at this one. This is interesting as well. Paper losses on the most opaque part of U.S. banks. Bond portfolios are now close to $400 billion, an all-time high, and 10% above the peak at the start of the year that caused the collapse of the Silicon Valley Bank. Remember we talked about that a little while ago. Now, we're not worried necessarily about the largest ones because they don't have to sell. And that's what this guy was saying here is like, well, we're underwater, but as long as you don't sell, you don't actually lose any money. But it doesn't make me feel better though, right? That knowing that like, hey, banks are underwater. And evidently a lot of these insurance companies have been taking hits. So like Prudential, AIG, Alliance, Generali, these kind of things. One thing as well is Warren Buffett's actually big into insurance stocks because that's just something that he's been for a long time. I want to say Geico was the one that I could be wrong on that. It was one of the insurance, and you guys can write in the comments which one was it. I'm thinking Geico, but I could totally be wrong. I remember it's one of the, there's a Washington, I just don't remember. I know it's one of the insurance companies, and I actually even know the story. I just can't think of the name off the top of my head. Is when he was a young lad hanging out in D.C., because I think his father was like a representative. He was knocking on doors, and he wanted to learn about the insurance business. They let him in the building like a janitor did, and then he met with like the vice president of an insurance company and said, hey, teach me all about insurance. And therefore, after that, he was investing in insurance. So I even know the story. I just can't remember which one. It could be Geico. It could be right. It might be Aflac. Could be that one as well. But irregardless, insurance could take a hit. And we talked about this also yesterday, where the lottery, the change of bond yields changed the math of that as well. Because essentially you're just locking up your money for long periods of time. That's what they call long dated bonds. Whatever, which is really interesting is this is the junk bonds, which we don't talk about that often. Evidently they're spiking. So the basic gist of it is you're a company, and you don't have so good a credit rating, and so you have to essentially offer high percentage rate returns if anyone's going to lend you money. Like they need something to make it worth their time. That's essentially how risk works, right? So that's why sometimes like if you don't have good credit, you have a really high percentage rate because they have to, put that into their fees and consideration on, is it worth it to lend to you? So I guess junk bonds here are at 9.3%, right? And there's just borrowing rates are going up, right? And it's the money's not there anymore. It's not the same. And, moreover, this is a private equity deal. So I actually have a lot of friends in venture capitalism. And this is the kind of stuff to where like, it is the wild west when you're messing with these sort of things. There's no guarantees in life. And this is sort of why, and I don't mean to scare you guys all day, every day. I just want you to be prepared. And so like, for example, we talk about the Metro Bank thing, we talk about bonds or whatever. I guess a simple, thing here is don't put your eggs all in one basket. And some of these fund managers seem like they did up with something like the Silicon Valley Bank where like they just put too much in long dated bonds and stuff like that. And these kind of things can happen. If your projections of the future that you thought that, the Fed was going to cut and you were believing all the, the media and the Wall Street, because they kept saying that for a while. And now, people are finally believe what the Fed actually says is higher for longer. It's starting to take hold. And it's kind of crazy, like the way these things break out. Like I said, it feels like the water is just sort of building up and now the dam's kind of breaking. And, moreover, for those people who you're just casually watching, you're just hanging out in town for the first time, when you see these kind of news, right? So this is Kaiser Permanente, which we talked about a couple of days ago. They went on strike. I think it's like a 3-day strike. And, this is like the largest in healthcare history for kind of strike. It's actually big. It's like big news, but we got so many crazy things going on in the USA. It's hard to keep track of all the big news. But, this relates to everything because like, think of it this way. If the banks don't have money and then the company, let's say this is an example. I want to say it was GM. It was one of the car companies. We'll just say GM, but I don't remember which one. I think it's GM though. They had to take out a loan because like they're losing money because their workers aren't working and these kind of things. And, Kaiser's, financials is like, well, let's say, for example, that they make a deal and they say, okay, we don't have the cash to pay you now, but maybe we'll borrow, et cetera. And that's when they start figuring out, okay, do they go to the bank? Does the bank trust them? Or are they going to do a different kind of thing? They're going to issue as some sort of bond, right? Again, it's the cost of borrowing and the availability to funds. That's sort of essentially what we're talking about here because the world needs money to flow or operate. And if the money's not flowing, things like slow down a bit, right? You guys see what I'm saying here? Moreover, the reason why we track the Speaker of the House story is because this also relates to essentially what is the cost to borrow money in relation to the Fed, in relation to the government deficit, how much are we spending, what's our budget, these sort of things. They keep interviewing this dude here, the Gates guy, and it's kind of interesting because he was the leader for kicking out McCarthy, and his rhetoric is actually, to be perfectly frank, I find it appealing. I don't like the guy. I don't trust the guy. I think he's got credibility issues. But yes, his rhetoric of, hey, all of you other politicians are all bought off by big money, et cetera. I'm not, I'm the man of the people. Yeah, take that with a grain of salt. But, his rhetoric is appealing because I think people, resonate with that kind of stuff, myself included. However, the problem is, though, and I want to point this out to you, is we have also issue in the USA where, like, people who say watch Fox News or some of these conservative outlets all day, every day, they feed you with a bunch of hooey all the time. Right? They're not going to be telling you about like, hey, Ally Bank is firing, or they're not going to tell you about Metro Bank, which I think, or Evergrande, like, I think are important stories. They're going to say, no. What you need to be thinking about is we need to put Donald Trump as Speaker of the House. So this is Representative Marjorie Taylor Greene, and they'll spend like a couple of days in news cycles talking about, oh, Trump would be a great speaker. Trump would be a great speaker, right? And, it's funny because like even Fox News are saying, okay, well, even if it's not Trump, maybe we'll go with Jim Jordan and this kind of stuff, right? And here's the thing. And I want to make this really clear, like the reason why it's crazy, and this is sort of like the dumbing down of Americans by American media, is like Trump, it looks like he's probably not even eligible to run, or not run, to be elected is a better way to put it. You're like, okay, so technically he could do it, but they would have to change the House rules. Why? Because the way the rules are structured is like, anyone could run except for Trump. He's, being charged with 91 counts of felonies, right? And the issue is like, if you've been indicted for one, you're ineligible, right? And that's Rule 26. I'm just reading through this stuff here. And so it's kind of ridiculous that we would spend 2 news cycles talking about someone who's like probably not even eligible to do it anyway. That's so ridiculous. And I can read it here. It says, what is Rule 26? Rule 26 is included in the House Republican Conference Rules and the 108th Congress, which was approved in January. It states that there's a quote here, member of the Republican leadership shall step aside if indicted for a felony for which a sentence of 2 or more years in prison may be imposed. It's like, okay. So that probably not going to make it happen for Trump. And I get it. It's fun to talk about Trump and he gets ratings and these kind of things, and that's why they do it. And one of the things I wanted to point out is like, okay, so again, we're talking about this stuff because it relates to everything, right? If the government's not functioning, that's going to probably hurt the U.S. credit rating, and we'll see if they shut down or not. That's on the table. I think we got 40 some days now. There are people who want to do it. I'll give you the names of some of the people, and I've read different names, but I'll just give you some. So there's a Steve Scalise is interested in doing it. It's from Louisiana. Jim Jordan, as I mentioned before, he's from Ohio. That's Fox News' favorite, which we'll talk about in a minute here. Kevin Hern from Oklahoma, and then you have like a Patrick Mahenzi. What is that, from North Carolina? Jim Jordan is Fox News' favorite. I don't particularly like the guy myself. This is just real. He's just kind of a hyper guy, and he's always jumping up and down all the time. I mean, literally like physically jumping up and down. And he's definitely a Trump supporter person. And there's other things I don't like about him, but I'm just saying that's sort of the things that I don't. One of the things too is I will say why Fox is so heavy on pushing him. Hannity was pushing him just the other day, is because he's a Fox contributor. So, if Fox had access and is buddy with someone who's now Speaker of the House, they would get yet more airtime. And I want to make this clear. This is what this game is about. You want to sensationalize things so that people keep watching. It's not necessarily about giving people the truth. You guys see what I'm saying here? This other person, Steve Scalise, I looked him up as well. I just looked up these people, and he had this weird thing where he's like speaking at some sort of white nationalist convention. It was founded by David Duke, etc. And regardless of what his beliefs or policies are, the one bigger thing that I think is he's just not a good candidate. He was diagnosed with cancer here. It says multiple myeloma. He's saying the cancer was treatable. That was in August 29, 2023. And then September 14th, it's just like this year, I guess he's beginning chemotherapy. I'm making any jokes about this stuff at all, right? This is very, really serious. Like, you get cancer. I find it really odd that you would want to be Speaker of the House and you just got diagnosed with cancer. I find that really odd. I don't get it whatsoever. It's strange to me. And if maybe you want to serve your country, and like I said, I'm not making jokes about this. I don't think he's a good candidate because he just literally just said he was diagnosed with cancer and has gone through chemo. It just seems odd to me. But the reason why we know that these people are interested is, I guess, they're on the phone making phone calls, and this kind of leaks out like who's trying to gather support essentially. This Kevin Hern guy, I looked up. I don't know much about him, to be perfectly frank. I just looked it up, and he just had a couple weird things that were like, there's two weird things. One was he was trash talking government spending, this kind of stuff, but then like he took, was it $1 and $2 million of those small business loans and part of the pandemic stuff. And then the other one that really stood out, if you take a look at this stuff, and that was the PPP thing, if you remember, guys. They're saying here Hern was ranked number 7 in the United States House of Representatives for the total number of stock trades. So he's an active stock trader, and he also violated the Stock Act in 2021. So not so great. I was like, okay, who else you got? Patrick Mahenry, I guess, is the Bodai dude. I think he might have a real chance to win, though. He's got a couple weird things in there, and just like I said, you can look this stuff up for yourself. He supports the payday lenders, so those are the guys that we talked about before. And if you remember, we just talked about this yesterday, to where this is going up in front of the Supreme Court. How do we regulate payday loans? And if you don't know, that's essentially the loan sharks that basically take advantage of poor people and charge them like 20-30% kind of stuff. It's predatory. So he's for supporting them. And then also too, they had this weird thing where he took money from Countrywide while he was investigating them, and this was during the prime mortgage crisis. So I was like, can you guys get someone else? But I think right now, at least according to Fox News, Jim Jordan is the favorite, and you can see, you guys can share your opinion on that. Now, pay attention to this stuff, because one of the things I think could be an issue going forward. Let's say that Congress makes a deal and they decide, you know what, the only way for us to stay open is that everyone gets what they want and we spend money on everything. Now, we just talked about this yesterday as well, that before, we're talking about the national debt here at $33 trillion. That was before, just yesterday, it was like $99,000 per every single American. Now it is $100,000. It just crossed the border. I should probably make a separate video on this stuff, but it's important because, we're talking about the cost to borrow money is going up. In 2023, this is part of our budget. You can see the interest part right here, right? Social Security is the biggest part. And then you take a look at, say, in 10 years from now, the interest will be a much, much bigger part because the budget keeps ballooning. And this is not a single party issue. And I can't stress this enough. I don't advocate for a particular party. Both of them are guilty of not, controlling spending. It's a real thing. And it's funny because like Biden like makes up stuff. So this is a funny headline. Biden touts a falling deficit even as it jumps back up. So it is true, right? And this is depending how you want to play the numbers. It is true we're down in terms of our deficit spending the last couple of years, but 2020, 2021, we were just like spending through the roof. This is both Biden and Trump. We're giving out those stimulus check money, et cetera. But we're still deficit spending, meaning that we're spending more money than we're bringing in. And it matters because the interest rates are high right now. And we're trying to figure out, and this is why I show you guys the Evergrande stuff, or I show you guys the UK stuff. I showed you the chart the other day of like which foreign countries buy our debt. It's like Japan, I think UK was, I want to say it was like Belgium, Luxembourg, and China, something like that. And essentially, right, if the government's trying to issue more debt to pay for stuff, and we're looking for people to buy it, and they're like, I'm not buying it, give me more money the same way, or give me more interest, give me more, this is why we talk about, say, the junk bond where it's like 9.5%. People want more return these days. Everything gets elevated. And so, you look at these things here where it says, hey, Fed's bid to avoid recession tested by yields nearing 20 years highs. It's crazy, right? The cost to borrow money is nuts right now. And it's funny, you get this other crazy headline as well. Everything's crazy. Like this last week, headlines are getting more, how can I say, more rapidly more crazy. That's a good way to say it. But read this one here. Only an equities crash can rescue the bond market, Barclays says. It's like, okay, that makes me feel a lot better. And it's funny because I've mentioned this before, and I can read the subline here. Japanese investors may favor domestic bonds as yields increase, meaning that we can't even convince the Japanese to buy U.S. debt, which normally in the past you would think U.S. debt is great. So this is where an issue is like, okay, what's the U.S. credit rating going to be? And whether or not this will end up being a campaign issue, right? The deficit, who knows? It was one back in, let's remember, if you don't know, I'm pushing 50, when Perot ran. And now I want to say that's 92, and that was the first Bush versus Clinton, and then Perot was in there also. And then for whatever reason, we quit talking about it, I guess because we just don't want to talk about it. Now it could be a real thing again, as I showed you with that chart. So anyway, that's sort of why I try to cover as many things as I possibly can and give you a full picture of what's going on. And today, it seems like the fire of the day is the Metro Bank situation. So I'd love to hear your thoughts on any one of these things. I appreciate your guys' time, and I'll catch you in the next video.